Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, November 3rd. Tomorrow will be the big day as we got the Bureau of Labor Statistics releasing their jobs numbers. So tomorrow will be a big day, and of course next Tuesday or Wednesday when we get the election results will be a big day. So once we get past those, we might have a little bit of breathing room as the market's been pretty volatile up until those points because of the uncertainty behind it. So we do got a lot to go over today, so we're going to jump right in it. We'll start off with the weekly jobless claims. So last week we had 258,000 people apply for unemployment. We figured it would be about the same poll for this week, and it came in a little higher, up to 265. So productivity, this is for the third quarter. So the last quarter we had a negative, we dropped 0.2%. Productivity was supposed to go up to 2.5%, and it exceeded that 3.1%. So great news right there. Unit costs, Q3 we had 3.9 back in the second quarter. Q3 was supposed to drop down or reduce down to 0.5%, and it went up 0.3%. So unit costs went up only about 0.3% for the third quarter so far. These are first revisions, which is good news. So it helps reduce our overall inflation numbers for employment. That helps anyways. And then productivity, of course, that increasing, that helps out a bit too. So far, we're getting a little bit of a mix because the weekly jobs claims went up. We also got market services. So we got the two services industries here. We'll start with the market services PMI for the month of October. So September we had a 52.3, and that jumped up to 54.8. However, on the ISM, non-manufacturing, also ISM services, we go from 57.1 with a forecast of 55.9 and went down to 54.8. So market services showing it going up and ISM showing it coming down, so services industry. So again, kind of a little conflicting information right there. Factory orders for the month of September. So back in August we had a 0.4% increase for factory orders. In September the forecast was supposed to go up 0.2% and it went up 0.3%. So better news for factory orders. So again, a little bit conflicting as we got conflicting information on two indexes that give us the services industry. Productivity and unit labors for the third quarter are showing good information. Higher productivity, lower cost for unit cost, and also weekly jobs claims went upwards. So again, mixed bag of information there. So as you could probably expect, stock market's a little mixed here right now. Nasdaq's down only a little bit. Again, while the other are up. Part of that is because Facebook came out with some earnings reports that weren't too impressive. So earnings reports are playing a role, as well as what we received the technicals, and then of course we're getting to election. So election polls, showing that creating more uncertainty as to who might be the president is kind of spooking the markets a little bit, making investors a little bit unsettled a little bit. Also, another side note here: a UK judge ruled earlier today regarding to the Brexit vote. So basically it put a little wrinkle into the Prime Minister's plans, where she thought she alone is supposed to be able to basically start off with the article implement, I guess is the word I'm trying to think of, Article 50, which is basically allows them to proceed, where the judge came in and ruled no, you need Parliament's vote to go ahead and proceed. So she has to go through another obstacle to be able to go forward with it, and they think this could potentially delay things possibly on a Brexit vote, or their departure from the EU as well. So again, that threw a little wrinkle. So as a result, the UK, the pound went up a little bit against the dollar. So the first time in quite a while they jumped that high percentage-wise. Bond market, we are again testing the 200-day moving average. So far over the last 6 days, we've been going above it. So we've been pretty fortunate. Right now, we're about 9 basis points from where we left off yesterday. Yesterday, as you can see, here's the 200-day moving average. Here's the first line of resistance, and we settled right on top of the first line of resistance, which is good. It was kind of hopeful that maybe we could have got a little jump upwards, but today we're starting actually below the 200-day moving average. And right now we're actually right on the 200-day moving average, and still right at 9 basis points under from where we left off yesterday. So Some prices, depending on, again, because we started off lower, some lenders may come out with pricing starting out the day a little bit higher. It might be a little bit so in this case I'll say kind of mixed, because more West Coast lenders come up with their pricing, right around 9 o'clock Pacific Standard Time, which would be about noon East. They typically will probably go with what's at that point, and right now it wouldn't be any change, not much change from yesterday, so they wouldn't really give any pricing change. That's kind of how it works out. Since the East Coast starts off sooner, they go off where the bond market automatically starts, and then the West Coast, by the time they open up their doors, they usually have it, see where the market is, and at that time it's already at noon in East Coast time, and get the pricing, so we could have a little bit different fluctuation with pricing right there. So right now, if you're in West Coast, which I am, pricing will be about the same as where we left off. So anyways, if you guys like to get more updates throughout the day, I do post updates on Twitter throughout the day here. Want to say thanks for watching. I hope you guys have a great day. We'll see you guys tomorrow. Bye-bye.